All right. So it's a beautiful day out, so I thought I wouldn't waste the opportunity to come out here and have a very quick chat with you guys. Actually, probably not so quick, to be fully honest. But the past couple of days, my wife posted a post up on her Instagram and Facebook, and she had a lot of people comment back on that particular post. And it was all about how we walked away from a car dealership without a car note. Basically, we walked away with the car and we paid for it 100% in cash, $0 in terms of month-to-month payments. And I think a lot of people reached out to her, and she encouraged me to come back on my channel and make this video. And I think that was probably a very wise thing to do. Anytime your wife tells you to do something, and you even remotely think it's a good idea, you should probably do it. So here I am doing it. So here we go. Tips on how to pay for a car in cash. Tip number one is really around changing your mindset. You know, a lot of people have the mindset that they won't be able to ever pay for such a large amount, such a large item, such a big item in cash. And I think that's a very dangerous mindset to have. It's not a mindset of abundance, which I think is a really important thing to do. If you're going to attract money, you need to be willing to accept that it's coming to you and that you're going to have more of it than you need. And that's a mindset that I tend to live my life, and my wife tends to live her life. And it's worked out extremely well in our careers and in our businesses over the past couple of years. Number two, and actually a brief pause in between number one and number two, is really, why should you buy a car in cash, period? I mean, plenty of people post online every single day, feeling proud, you know, and they should be proud. They are making a big decision to buy a car. But a lot of people go out there and they buy a car with a loan, which, if you do that, I'm definitely not judging. I don't think it's necessarily a bad thing to get a loan on a car, and I'll talk about that a little bit towards the tail end of the video. But a lot of folks go out there and buy a car that they simply cannot afford. You know, they don't know how they're going to pay for their rent. They don't know how they're going to, you know, eventually move out of their parents' house. But you immediately see them next month go out and buy a car, when there are obviously more pressing things that should be on their mind, right? Like maybe, you know, working on their career, learning a new skill, getting out of debt, figuring out how they're going to make it, you know, 3 months from now. And it sometimes, frankly, disappoints me when I see something like that happen, because I know it's just a matter of education. And that's why I'm making this video, because if I can impact at least one person out there, and if I can help you have a better mindset and a better strategy around car buying, then that's great. That's exactly what this video is for. So you should not buy a car with debt or with a car note, because cars actually go down in value. The moment you drive it off of that lot, that car is going down in value. And if you're going to be somebody that's going to be prosperous, that's going to build wealth over the years, you want to make sure that you are either eliminating or you're minimizing the things that you buy that go down in value. So you got to think about it this way. When you buy a house, it is very likely that that property value is going to go up over time. So buying a home or a rental property is an investment, right? At the very least, it's going to go up in value most of the time, as history has shown us. Number two, owning your own business. This can be somewhat of a risky one, but if you hit big, you can really make it big owning your own business, right? And as long as you don't take out debt, you do it at the speed of cash, as I say, then I think you could potentially grow a very large business with very little money and make a lot of money as in return for your time. And number three is investing in equities or stocks or bonds or mutual funds, investing in the stock market, which is probably my preferred way of building wealth, and it's a way that I've built most of that we've built most of our wealth in our marriage. So that is a reason why you don't want to buy a car with debt if you can help it. Okay, so number two is making sure that you minimize and take care of all of your debt before you buy a used car, okay? And I say used car on purpose. When I started my entire journey with money was really when I joined Cisco, which is a company that I work for now. I started working there and I started making more money than I ever did prior to that. So I realized that it was time for me to start learning about money and how it works and what I should do with that newfound income. And basically the first thing that I learned was you should minimize or actually get rid of all of your consumer debt. So very, very important to get rid of all of your credit cards, pay them all off. I don't care whether you cancel them or not, but pay them off. Don't use them for a while. Get used to living off of cash. If you can do that, great. If not, stay away from credit cards. Do not get into that, because that is one of the easiest ways to get into debt, is by buying things that you cannot afford, and credit cards are a very easy way to do that and to take a step backwards. And so don't do that. Get out of debt as quickly as possible. Student loans, you definitely want to pay those off quickly. You don't want to be worrying about buying a car if you have a pile of student loan debt. And I don't care who the president is. I don't care if it's Biden or Trump and he's promising, or either of them promise that they're going to pay off your student loans. You have the responsibility to pay off your student loans, and you don't want that to be dragging over your head for 10, 15 plus years. Pay that off quickly and create a plan to do that. I have other videos all about that, so if I were you, I would go ahead and check that out in the links that I'm gonna have above after you watch this video. And by the way, drop a like down there if you are liking the content so far. Number 3, once you've paid off all of your debt, you wanna make sure that you save up some money for a rainy day. So that is your basic, grandma's advice: save 3 to 6 months of expenses, of living expenses. That could be, anywhere from $8,000 to maybe, $20,000 or something like that. That way, if you ever lose your job, you have a huge emergency, you have, your car breaks down, a roof, I don't know, whatever, you have something to cover when you have a rainy day. That's what that is for. The next thing that I would highly recommend you guys to do is to learn new skills that are valuable in the market. Some of you may be stuck in careers that you really enjoy. Others may not enjoy it. If you're in the camp where you don't enjoy what you do, I would spend a considerable amount of hours every single week learning a skill that you actually do enjoy, right? And preferably a skill that can get you paid well. A couple of ideas, learn how to program, right? You don't need a degree. All you got to do is go online, learn how to code. You could be working for a Fortune 100 company and making over $100,000 a year programming. You could learn people skills, communication skills, learn how to sell. That is also a big, big component of our economy, and salespeople do get paid extremely well. So those are just a couple of ideas of skills that you can learn any day without going to college. If you set aside 10 to 20 hours a week to learn that new skill, you invest in a coach, you invest in a course, you will eventually at some point, maybe even just 6 months down the road, be in a new career or take your career to the next level, right? Regardless of whatever it is that you're doing now, if you enjoy it, keep doing it, but find ways where you can do that same thing but make more money doing it. The next tip is really going to get into the tactics of buying a car in cash. My recommendation is, when you're saving money, you want to make sure that it's automatically being saved, okay? So there is no point where I get money from the bank and put it in my savings account. Physically or electronically, I don't do that. You know why? Because I'm never going to do that, right? It's something that you forget to do. We all have things that we worry about on a day-to-day basis, and I'm sorry, but me going to my bank account and making a manual transfer, although I might be able to do it and remember, I would rather not leave it to chance. I would rather, every time I get paid, 10%, 20%, whatever percentage that you want to do, automatically put it into your savings account and earmark it somehow for that goal. In this case, we're talking about cars, And that is one really easy way for you to be constantly saving for a car. The next tip is really reconsider whether you need two cars in your family. Okay, you might be a single person, this might not apply to you. You obviously just need one car. Really reevaluate. Do you and your spouse really both need a car? I mean, really think about it, especially after last year. I'm somebody who's been working from home for over 6 years. My wife has been working from home for over 3 years. And it is a very, very rare occasion when both of us have to leave the house and go two separate ways. I mean, usually I'll take it to a client and come back. She goes to the gym, she comes back. She goes sees the client and comes back. Sometimes we go together. We go to the grocery store, we go run errands, we're together. We go out to eat, we're together. Very rarely do we ever go out separately. So we really evaluated our patterns, not even just over the past year, but over the past couple of years. And as a result, we decided to consolidate down to one car. And it's just my wife and I, we don't have kids. So we decided to consolidate down to a 2018 used SUV, Jeep Compass Trailhawk. And so we had two cars already that we had completely paid off already. My car, which was my 2011 Chevy Cruze, I drove for 10 years. I bought it with a loan. First year of college, that was a huge mistake. I couldn't afford it, but I didn't miss a payment. I made sure that I made all my payments, and a year or so after starting to work for Cisco, this was about 6 years ago, I paid off that car like in 9 months. I didn't have a whole lot left on it and I was making a lot of money. I decided to pay it off. Best decision I ever made. I kept driving that car for over 5 years after that till now, as I was saving for a car, among other things like a wedding and a house and things like that along the way. But you get the idea. I drove the car for a long time. I'm just trying to buy a car and drive it for as long as possible. That way I can save up enough money to buy another car without any issues. So my wife had a car for about 5 years, and we were considering keeping the car. It was actually another Jeep, an older Jeep. And again, we reevaluated what it was that we were doing on a day-to-day basis, and we said, you know what? It probably would be better if we just sold that car or that Jeep and used that money and traded it in for another car. So that's exactly what we did. We reevaluated. We said, okay, I'm going to sell my car, we'll trade in your car, and we'll put up whatever we have in savings into buying a brand new car to us. Our car, in full transparency, cost us about $21,000. About $12,000 of that we paid in cash from our savings. And to be honest with you, it was a great feeling. It really was a great feeling. And I'm really glad that my wife shared that, because I feel like it's a great way to show people that it can be done. And here I am showing you and giving you the opportunity to do exactly the same thing. We paid for the car in cash, and now we have a single car and we love it. It's really nice. We finally have a car with a backup camera. We have a car with some leather seats that we really feel proud driving. And you know what we like most of all though? It's not the leather seats, it's not the technology in the car. It's really the fact that we don't owe any money on the car. We actually own the car. If we don't want it tomorrow, we can sell it tomorrow. And there really is a lot of freedom that comes with that. And I really, I wish that more people could feel the feeling of not having debt, because it would, if you knew the feeling, it would definitely hype you up and make you feel like you need to be there too. And that's what I really believe. And I'm hoping that some of that comes across to you guys. And you know, with that, it's really, that's really all there is to it, right? Make sure that you're intentional about what you're doing for your income. Make sure that you're saving. Paying off debt is a priority before this. And just simply reevaluating what it is that you really need. We are people, my wife and I, we're people that we don't really value having a luxurious car. We don't really care to have a Mercedes. It doesn't have to be new. And the biggest reason why I don't buy new as I promised that I would share, is because that's where actually most of the devaluation of a car happens. When you buy a car brand new, you drive it off the lot, that is the point when it devalues the quickest. The first 2 or 3 years that the car has been made. After that, you know, it still goes down in value, but not as quickly as it did in those first 2 or 3 years. So personally, in my opinion, you could still buy a very good, very reliable used car for that's only like 2 years old for less than 20 grand. I know that we did it. We could have bought a car or another vehicle for less than that. Honestly, we could have done something, a smaller car for $12,000. Maybe something that I would have bought if I was single, didn't have kids, didn't have dogs, things of that sort. But for us, this was a perfect car. We went online, we shopped online, we looked on TrueCar, a couple places, made sure that we got a good deal, because obviously when you're paying in cash, you want to make sure that you're getting a good deal, not on the loan, but a good deal on the price of the car, right? And that's one last thing that I'll leave you with, is that a lot of people go into a dealership and all they care about is what's the monthly payment. And another mindset shift here is stop thinking about what the monthly payment is and just think about how much is the car. How much is a car, and negotiate based on that. And so, lastly, I live in the real world. I realize that not everybody is going to be able to pay for a car in cash. I know that. I realize that. I've been in a situation like that before, and I wish somebody had explained what I'm about to explain to you guys. And this is a rule that I think you should follow if you are going to buy a car with a loan, okay? And that is the 24-10 rule. This is what the 24-10 rule stands for. If you're gonna buy a car, make sure that you put down 20% for the down payment. And the reason that you wanna do this is to make sure that you have skin in the game, one. You wanna make sure that you really want this car because you're saving up 20% for it. Number two, it makes sure that you're not upside down on the car. Upside down means that you owe more on the car than it's worth. You do not want to be in that scenario, because if shit hits the fan, you want to be able to sell that car and buy a crappier car, or just sell the car outright if things really get bad. So 20% down is an absolute minimum. If you can do more, do more. 4, that stands for the 4-year loan period. The way a lot of these car dealerships work, and it's super shady, is they get your payment down by increasing the number of years of the loan. And what happens is when you do that, it's bad for you in many ways. First off is you're paying a whole lot more in interest, because the longer the loan is, the more you pay in interest over that time. Number 2 is you pay down that car much, much slower, right? So you will probably end up in a scenario where you owe more on the car than it's worth, especially if you trade in and roll over the negative equity. That is a bad position to be in. But if you get a short-term loan, 4 years, preferably 3 years would be great. To pay off that car in 3 years, I think that is very acceptable. So the 20% down and 4 years or lower in terms of the term of the loan. And the last number is 10. And that means that all of your cars combined, if you have 2 cars, that means you divide 10 by 2, that's 5, right? But let's just assume 1 car for you and your family or for yourself, 10. You don't want the payment and the maintenance of this car to be more than 10% of your monthly take-home pay. That is the absolute maximum. And honestly, I'd probably be looking at something closer to 8%. So if you bring home X amount of dollars a month, you want to make sure that no more than 10% is dedicated towards the car payment, the insurance, the gasoline, and the maintenance that you put into that car. That is the rule that I would follow if I was going to get a loan on a car. The absolute bare minimum. And honestly, if you could pay off the car within those 4 or 3 years and pay it off even sooner, that is even better, right? So again, I live in the real world and I realize we are not all in the position where we can pay for a car in cash. Ideally, you will get to that point where you'll be able to do that if you want to. But just know that if you are going to get a car loan, it's okay. Make sure that you have a good credit score, because the lower that interest rate, the better, right? If you have a good credit score, that means you pay off your credit cards on time, you're never late for anything. That is even better. That's basically it, guys. I mean, there really is no secret around it. It really is hard work, and there's no easy button. We definitely didn't use a coupon code to walk out of there without a payment. It was definitely hard work over years and years and years, and hopefully I just bestowed some wisdom, some useful nuggets for you guys to take back and implement in your everyday financial lives. Hope you guys enjoyed this video, and I'll see you all in the next one.